What's up, everybody? Welcome back to the Crypto Talk, bringing you tools, knowledge, resources, and the latest news in the crypto space. Today, we have fear, uncertainty, and doubt being spread across the markets like wildfire. Bitcoin major crash starting April 17th, Joe Biden tax laws, and more. I'm here to prepare you for the worst case scenario, so please hit the subscribe button. That way you don't miss out on any updates. My name's Khalil, and let us get started. First up, we have our market update, and the markets are not looking so hot, guys. With the new tax laws coming out and all the information about the bull run possibly being over, a lot of FUD is being spread into the markets here, so everything's kind of down on the day. And if you guys haven't heard what's actually going on with the new tax law and how it's shaken not just the whole crypto market, but the stock market as well, here's a quick video so you can check it out. Biden is proposing to double the capital gains tax rate for wealthy individuals to 39.6%, meaning federal tax rates for some investors could be as high as 43.4%. Stocks definitely slid, and we'll get to that in a second, but check out this video.
Back to taxes for a moment, because the Dow is down about 350 points on reports that the Biden administration is going to propose doubling, essentially, the capital gains rate for high-income Americans. Can you tell us any more about that plan, and do you have any concerns that that would discourage long-term investing?
Well, we're still finalizing what the pay-fors look like, but I will say that the president's calculation is that there's a need to modernize our infrastructure, there's a need to invest in childcare, there's a need to invest in early childhood education and making our kids and the workers of the next generation more competitive. And he should propose a way to pay for it. His view is that that should be on the backs, that can be on the backs of the wealthiest Americans who can afford it, and corporations and businesses who can afford it. And his view and the view of our economic team is that that won't have a negative impact. There are alternative views, or there are proposals that don't exist yet on how to pay for it. That will be a part of the discussion, but he stays firm to his commitment to not raise taxes on Americans making under $400,000 a year, and he'll have a range of proposals on how to pay for his plans to invest in education and childcare.
So they know they want to tax this, but they don't know how they're going to do it. We'll see how that works out. But let me show you how the markets are reacting to this news. So this is the S&P 500 as we speak. And you can see there's been a high sell-off since the news there, basically. And to be honest, since the beginning of this year, we've just been on a major pump. So in terms of, the actual market, it looks like we need a correction. And maybe this just happened to be the right time. But the crypto markets are looking the same. They definitely took a hit on this one. The tax law that actually happened recently, so this was the sell-off. As for this long wick of liquidation pattern here, now that on April 17th, guys, Saturday, just a few days ago, the price fell more than 12%, liquidating $10 billion from traders using margin and leverage. Now, there's a lot of rumors of why that happened, and I am here to break down each one of those for you and kind of give you a main idea to think about. So first up, crypto payments banned in Turkey. Buying something with Bitcoin in Turkey will soon be illegal, and the topic of the crypto payments has become a political debate since the Central Bank of the Republic of Turkey's April 16th announcement. It's going to go into effect on April 30th. Also bans the use of digital wallet providers as fiat on-ramps for crypto exchanges. So yeah, I guess it's getting banned in Turkey. There's some bad news there. We also have it getting banned in India, guys. So Bitcoin might become for India's millennials what gold is for their parents, no matter what the government says. India, the fifth largest nation by GDP, often makes headlines for its attempts to outlaw crypto, real or rumored, but the government's less than friendly attitude toward crypto has not curbed Indians' curiosity about it. Nor do rumors scare away the giants of the crypto world. Just last week, Coinbase announced it's going to plan and establish its presence in India. Doesn't look like, even though it's getting banned places, the big crypto guys are holding off, which is good information. One of the actual major causes of the crash here was a blackout in China that caused the Bitcoin hash rate to drop. So investigating a bit about it, it turns out the blackout in China region caused almost half of the Bitcoin network to go offline in 48 hours. This blackout was due to maintenance after the massive flooding and security issue at power stations in China. China province powers a huge chunk of Bitcoin miners. With this blackout, the Bitcoin has a rate collapse significantly, leading to further price correction. Popular market analyst Willy Woo shares that Bitcoin hash rate and its price has always been correlated, and thus following the blackout in China, today's price action followed the collapse in the Bitcoin hash rate. So this was actually one of the major reasons of the crash there on the 17th. Because of this blackout, the whole mining network for Bitcoin crashed, right? One more piece of news that actually made something like that happen, and it was Coinbase, guys. We heard about Coinbase coming out on the NASDAQ Q last week, but insiders cashing out. Apparently, Coinbase executives sold off tens of millions of dollars worth of coin stock on opening day, but that doesn't necessarily mean what you think it might. And I believe Coinbase actually took a lot of the story away from Bitcoin last week in general, which, could have caused some major price corrections and all that. But a viral tweet this weekend suggested top Coinbase executives held a fire sale with their personal stock, an accusation that, if true, would cause alarm since it implies they don't have faith in the future of their own company. But with many things on social media, the tweet failed to provide a full account of what was going on. If you missed the tweet, the question showed a chart depicting certain stock sales of senior Coinbase figures after the company went public last Wednesday. Most notably, the chart indicated a line that supported to reflect what percentage of their stock holdings and what they sold. So here's a picture of that right here. Let's take a gander at this. All right, lots of numbers, lots of things, but that's the tweet there. And while the sales seem jaw-dropping at first glance, the reality is less scandalous and reflects the vagaries of SEC reporting rules. The rules in question oblige senior figures at public companies to disclose when they sell their stock, a useful piece of information for retail investors. In the case of the tweet about Coinbase, the data is misleading because it doesn't account for the total of the stock, which certain executives are entitled. CFO Alicia Haas, the sell in question, came after she chose to exercise a portion of her stock options, selling around 255,000 shares in several tranches over the course of last Wednesday. While the figure suggests she sold off all that she owned, that form shows Haas owns around 1.7 million Coinbase shares, and she only sold off about 15%. Very different story than flushing all of her shares. This caused a lot of panic for the crypto space because people thought, they were selling off all their shares. Obviously, they don't believe in Coinbase, which is a very, very big exchange and crypto wallet for all new users of crypto. I actually refer new users to Coinbase because it's one of the best ones out there. So yeah, with all this misleading news, there's just been so much FUD. And then we have the Joe Biden tax rates coming out as well. It's just been dragging crypto down a lot the past couple days. But I'm hoping we can make a recovery. We have a very, very strong resistance zone right around here, the $50,000 level. If we turn on our visible range, we can see that as well. And if we turn on our moving averages, our EMAs, we can see that we fell below the 50. Now, this is some signs that the bull run may be over, but honestly, guys, in the last bull run, we actually dropped below that beforehand. We dropped below the 50. It was right around the time of April. You can even see here, bam, dropped below the 50. Right here, dropped below the 50. We dropped below the 50 about 3 times over the course of the last bull run. So, doesn't necessarily mean this one's over, just something to pay attention to. If we drop below this $50,000 level, that's when I'll be a little concerned here. But until then, I have high hopes for crypto. And with that being said, guys, I'm out of here. If you liked the video, if you want more news, then go ahead and like and subscribe. I'm not a professional advisor or a financial advisor, so please always do your own research. Watch out for any scams and safe investing.